Abby, very good to see you. Today, we're going to talk through 4 paths to a Roth IRA for high income earners. Roth IRAs are such a great way to create wealth. Roths offer tax free growth and tax free withdrawals, and that money can grow tax free indefinitely because the accounts don't have any required minimum distributions. But there is a catch, of course. Please explain the income and contribution limits.
Yes, so as usual with things that sound too good to be true, there are some catches here. So the IRS has figured out a way to limit these to certain circumstances and certain income limits. So this is going to be different for if you're filing single or if you're filing joint. So the contribution limit, let's just talk kind of from a high level, for 2025 is up to $7,000. So if you do qualify to make a Roth contribution, then you can contribute up to $7,000. There's also a threshold, though, for income. If you are a single filer and earn less than $150,000 for your MAGI, your modified adjusted gross income, you can contribute the full $7,000. If the contribution phases out between 150 and 165, so you can't contribute the max, but you can still contribute some, and then you can't contribute at all if you have a MAGI of over 165. With for married filing jointly, those limits are full contribution if it's 236,000 or less. If you earn or if your MAGI is 246 or above, then you're totally phased out. You cannot make Roth, at least direct Roth contributions, which is what we're going to talk about today, how to kind of legally get around those rules.
Right. So this video is for those who are income restricted, but also those who kind of like to goose that contribution limit because $7,000 isn't a lot if you're trying to grow a
Right.
big pot of tax-free money. So
Right.
let's talk through your first option, and that would be see if your employer offers a Roth 401k option because these have no income restrictions.
That's right. So this is the probably one of the easier ways to get around that. If you're over those income thresholds, reach out to your plan administrator. Typically, it's going to be like Fidelity or Vanguard. It could be a number of different companies, but there's always going to be a custodian or a plan administrator for your 401k, and ask them if there's a Roth option. So these used to be actually pretty rare. But over the past, I'd say 5 years, they've become much, much more popular. There's a big push, as probably all of us have noticed, towards these Roth funds. People see how valuable it is. So more and more plans are offering these. So the first step there is going ahead and reaching out, seeing if the Roth is an option. And then if so, you can direct either all or part of your salary deferrals, your contributions, to the Roth option. Even if you're over those income thresholds. Now, obviously, there's still limitations there. You can only contribute so much to a plan in the year. And most likely, your matches are still going to go to the pre-tax fund. So you'll probably have 2 different buckets, as I kind of like to describe it, some that are pre-tax and some that are tax-free, but it's at least better than having everything in pre-tax.
Mm-hmm. And the next option would be something we've talked about many times before, a Roth conversion.
Yes. So this is for individuals that already have either a 401k or a IRA that's pre-tax that wants to go ahead and get those funds to a Roth position. So we've talked about this many, many times, but just kind of in a nutshell, this graphic does a good job of explaining you're going to pay taxes now on whatever you convert. That goes into a Roth account, and then as long as typically there's a lot of different rules here, but typically you want to not touch that for 5 years. If possible, you can always take contributions out without penalties, but you want a little bit of a longer clock there if you're doing Roth conversions. But you pay tax now, you put that into a Roth account, whether it's in a Roth 401k, you might be able to do an in-plan conversion, or you can do a conversion from your 401k to an IRA, or from an IRA to a Roth IRA. And the beauty here is that there are no limits. There's no income limits. There are no limits as far as how much you can convert in a single year. The only limits is how much how much in taxes do you want to pay for that year, and how much makes sense to convert that year. Most of the time, we find that after we do an analysis for our clients, it doesn't make sense to do a massive conversion all at once. It makes sense to do it over a number of years, a certain amount, so that it maxes out your current tax bracket without bumping you into any unnecessary taxes, especially if you're 65 or older and you're subjected to potentially IRMA, which is basically a surcharge for your Medicare premiums if you're
Right.
an earner. So that's something that you need to be cognizant as well.
Right. And then next option is a backdoor Roth.
Yeah, so this is one of those funny nuances with the IRS, and they have said multiple times that they're okay with this strategy. They're fine with it. It's perfectly legal. I don't understand why they make it so complicated. But basically, this is a way to get $7,000 into a Roth IRA, even if you're above those limits. You just have to jump through some hoops. So what you do is contribute to an IRA. It's non-deductible though if you're over the income limits, and then immediately you do a Roth conversion, which is not taxable because you didn't get a deduction in the first place. And so basically by kind of bypassing that, you still have the $7,000 in a Roth IRA. You just can't directly contribute to the Roth IRA. It's silly. It doesn't make any sense why they just don't take the income limits away from Roth IRAs. But it's still a way to get that money into a Roth if you're over those income limits. However, you have to be really careful here. If you already have money in traditional IRAs, then there's something called the pro rata rule that will basically mess this up. So don't be really careful, or maybe even don't do it if you already have funds in a traditional Roth IRA, a traditional IRA. Typically, what we recommend is do conversions instead of the backdoor IRA strategy to bypass the pro rata rule. And then once you have converted all of your traditional IRA, then you can start doing those backdoor Roth IRA contributions. It's just a much easier, cleaner way to do it that will make sure that you don't get into any trouble with the IRS or a surprise tax bill or penalties.
Right. Nobody wants that. The last strategy is a mega backdoor Roth, but this strategy as well can be very complex, and you really should consult a professional.
Yes, so this strategy is for the high achievers out there that really, really want to max their tax-free funds in an IRA or a 401k, but it's very nuanced, and you have to check a lot of boxes before you know if you can even proceed to the next step. So it's essentially a loophole, just like most of the strategies we're talking about, but perfectly legal, where you make after-tax contributions to your 401k. You do have to, number one, though, make sure that you can make after-tax contributions to your 401k. And then number two, make sure that your plan allows in-service rollovers. In-service rollovers mean you're able to transfer or roll over funds from your 401k to an IRA. So essentially what you're going to be doing is contributing to the after-tax portion of your 401k, and then immediately before that money can earn anything, convert that to a Roth IRA. Again, it's a little bit nuanced. There's a lot of steps that need to be taken. It's not particularly difficult, but you just have to make sure you're checking the right boxes and doing it in the right order. But this is going to be where you get the highest contribution limitation. So you can contribute much, much more, tens of thousands of dollars more than really any of the other strategies that we're talking about here. So if you are a high earner, you're a super saver, this is where you want to concentrate on a strategy that can raise the ceiling for you and help you build that tax-free wealth.
It's good to talk through these options because it's apparent the power of a tax-free account, which is why we're talking about this. Everybody wants to have that tax diversification. But again, the Roths make a lot of sense for a lot of people. If somebody wants to talk through any of these strategies with you, Abby, how can they get a hold of you?
You can always give us a call at 678-442-0255. A lot of times people think that these strategies are they're not a fit for them, or they earn too much, or they're excluded in some way. They've been told in the past that they're not allowed to do that, but typically there's a way. As long as it's legal, then we can help you find that path to help you accumulate more of that tax-free wealth, that more and more people understand how valuable that really is. You can also send us a message. Visit us at theretirementfamily.com. Let us know what's on your mind, what you would like to talk to one of our fiduciary advisors about, and we'll reach out, schedule a 15-minute introductory call, and see how we can help.
Great. Abby, thank you.
Thanks, Erin.